Hello everybody, my name is Mark. Welcome to another one of my videos. In this video I'm going to do a quick little video on updating my option collar strategy. If you would have taken my little advice and bought Apple about a week ago, I did my last video on September the 13th and I simulated doing an option collar strategy on Apple. Okay, so this is an update where you would be with your money had you would have done all that. So without further ado, let's get going. Now, this is Apple, and if you remember, a week ago I would have had you buy 100 shares of Apple at $158.89 a share for a total cost of $15,889. Then I would have had you buy one put option, $145 strike price, good all the way till January of 2020 for $1,600. And then I would have had you sell a call option at the $175 strike price, good all the way until December 15th, 2017 for a credit of $215, which would have got added to your account. So let's see what happened to Apple. Today is September the 20th, and a week ago, as you can see, Apple was worth $159.06. That would have been the closing price. But today, as you can see on this slide, Apple dropped down to $153.39 for a loss of 2.68%. I'm sorry, for a loss of $2.68. Actually, that's just today. Apple is down quite a bit over the last week, right? So let's see what would have happened. If you remember, we bought Apple at $158.89, right? And had we would have just done that, this is what would have happened. Okay, Apple dropped to $153.39. You would have $15,339 for a total loss of $550.50. That's if you would have not done an option collar and you would have just bought 100 shares of Apple. But that's not what we did. We did this. We also bought this put option at $1,600 and we sold that call option for a credit of $215. So let's take a look at what happened to those stock options. So let's pull up our option chain and let's first look at the put option. We bought the put option good all the way till 2020. So let's pull that up and look at that. Our put option, our $145 put option, is now worth somewhere between $1,720 and an ask for $1,795. So let's say we can get it for for $1,750. Okay, we would have made a $150 profit, right? So we bought that put option at $1,600. Our put option is now worth $1,700, let's say $50 in the middle somewhere. So here's what would have happened. Instead of all of this, which you see here, we get to add this down at the bottom. We made $150 profit. So now our loss, instead of losing $550.50, we only lose $400. We cut our losses down to $400. So that's a very cool thing. Option collar is doing its job. Okay, now let's look at our call option. So again, pulling up the option chain, and we sold the call option for December right there, and we'll pull that up. And again, we got to look at the out of the money, right? And this box is located at the top of your option chain. So zooming this up, we click on that little arrow right there, and then we click on the out of the money, click on the view chain, and then bam-o, we look at our $175 call option, and look at that. Our call option dropped in value to $106. Remember what we did? We sold the call option for $215. So we made money. So now we get to add that profit. We made $109 on that call option, cutting our loss down to $291. So the option collar is doing its job. Now, did I know that Apple was going to drop like this a week ago? No, I did not. I took a bullish position. Apple came out with their new iPhone, and then there were some negative reviews on their watch, and that's why it dropped. So people are always guessing, well, maybe Apple isn't what I thought, etc., etc. But that's why I believe in the option collar strategy. Our losses have been cut. Okay, so instead of losing $550, we only lose $291. We still have $15,600 left in our account. We started with $15,889. And the good news, if Apple continues to drop, our put option will continue to rise in value. That's what the option collar strategy is for, right? Now, there are several ways we can manage our option collar strategy. Number one, we can sell our $145 put option for a profit and buy a cheaper one at a lower strike price. So let's take a look. We can see here the $140 put option is only worth somewhere between $1,470 and $1,525. So let's say $1,500. So we could make that profit, and then we could buy this cheaper one. And we would do this if we were bullish and we thought Apple was going to bounce and it was going to go back up. Otherwise, we wouldn't want to do that. We'd want to hang on to our $145 put option. So that's one of the things we can do. The second thing we could do is number two here, we can buy to close our $175 call option, sell another one at a lower strike price or a longer expiration date. So let's take a look at the January ones, okay? And pulling up the January ones, we can see that the $175 call options are worth somewhere between $169 and $175. So if I wanted to, I could buy to close out that other call option, and I could make my $109 profit, and then I could sell this one at the same strike price. Or I could sell this lower one and get a little bit more premium. I could make somewhere between $253 and $258, and if this thing expires by January, then I would get to keep that profit, and then I could maybe sell another one a month or two later. And then the third thing we can do is, as you can see, number three, is we can wait and hold and do nothing until December the 15th. And I know this is the least favorite of all the three strategies. We all love to feel like that we make good decisions and that we're in control, but sometimes the best thing to do is to do nothing, because who knows what the heck could happen between now. I mean, we have a put option good all the way till 2020, so who the heck knows what's going to happen between now and then, right? So right now, we bought those 100 shares, and that transaction was simulated on September the 13th, 2017. It's only been a week, so this position is still very new, very green. So who knows what would happen. So if it were me, I probably would do number three and not do anything. And when I look at the chart, this is a 5-year chart, I see a little blip, right, in a stock that still has overall growth. And this is a semi-volatile stock, so if you don't like volatility, then maybe you might want to think of another way to invest your money. But for me, I like volatility. Volatility is how you make your money. Volatility is priced into the value of stock options, right? So one little blip isn't going to make me panic, you know. If I had that 15,000 whatever dollars and I would have did that a week ago, I wouldn't be panicking. The option collar's protecting my money, right? So what I would do is I would zero in on this little part right there, and I would look at the 1-year chart. This is the 1-year chart, and what I see is I see a level of support right there at the $140 level, and I see a level of resistance right there at the $160 level. So those are the two levels that I'd be making my decisions. And over the last year, Apple has been growing, and this is the first time in several months that Apple's hit a major blip that has hit some headwinds or some resistance. So if it were me, I probably would sell a lower call option and I'd hang on to that put option a little bit, because maybe Apple has finally hit some resistance and maybe it needs to prove itself and somehow break through that upper $160 level. So that's just me. That's what I might do if I had my money invested in this manner, right? But for now, when I look at the company itself, nothing has fundamentally changed. It's still got a $792 billion market cap, still has a good earnings per share of $8.79, still pays the dividend, and the next earnings is on October the 24th. That's the time when you really got to decide, hey, you know, where's Apple headed? And that's still a month away. So I wouldn't be panicking. I'd probably just hold and do nothing. I probably would sell a lower strike price of the call option, but I wouldn't be doing anything with the put option. I would be trying to meet the headwinds that I think might be coming according to the chart of what I just saw, right? But this is what I want you to zero in on this video, okay? Our loss, instead of losing $550, has been cut down to $291, okay? So instead of losing $550, we only lose $291. We still have $15,600 left. Option collar is a great strategy for long-term investor that does not want to take a lot of risk to make money in the stock market, and you can use the option collar strategy on any major stock knowing that your money is safe. So that's what I want to zero in on. That is Apple. This is a quick update on your option collar strategy. Had you would have watched my video a week ago and you would have took my little teeny tiny advice and you would have set up an option collar going by the numbers that I had. So that's it for this video. Thank you for watching. If you have any questions or comments, feel free to leave it in the comment section on my video, and I hope to see you in another video. Thank you for watching and have a good day.